Hi everyone, and welcome to the Buffett and Beyond weekly video stock analysis and these methodologies of clean surplus based on the book Buffett and Beyond, second edition, published by Wiley Publishing. And this week we're going over Apple Computer, and the question now is, should this stock stay in your growth portfolio? And remember, this is June 28, 2025, and we're going to look at past charts of this stock and compare them with the charts that we just have now as of yesterday. And remember, folks, if you want to live on this beach like Jimmy Buffett once did, you've got to learn how to invest even better than Warren Buffett does now. Well, let's look at Apple. We know what it does, but let's go over it real quick. It was established in 1977 and is now one of the world's largest makers of PCs and peripheral and consumer products, such as the iPhone, smartphone, Apple Watch, iPad, and the Mac line of personal computers. And it also sells operating system services like iCloud storage and Apple Pay, and that's what it's trying to make money on right now is Apple Pay right in here. And a host of digital content from popular iTunes store and other portals, has approximately 160,001 employees. And let's look at last year, July 2024, so it's almost exactly a year ago, call it 11 months, and let's look at Apple compared to the S&P 500. Now the S&P 500, the blue lines in here, and we're comparing the clean surplus return on equity. And remember, the clean surplus return on equity, totally different than the traditional accounting return on equity. And Apple was almost twice as high as the average stock. Net income, now net income is the clean surplus, cleaned up earnings, which means non-recurring items and future liabilities are taken out because we want the core operations of the company. And Apple had 20.8%, the average stock around 13%. And revenue over here, the average stock is 7.1%. Apple was double that. Now, let's bring it up a year until just the other day. And we are looking at the 2026 projections. So the last slide was a 5-year average. Now we're looking at the 2026 projections. The clean surplus ROE is 17.5% for Apple. What was it last time we looked at it? The average 5 years was 23.7. So we see today, projected for next year, projected for 2026, that it's going to fall to 17.5%. Now here's where it really hurts. The net income is below the average stock. Let's look at the 5-year average. It was 20.8%, and now it's down to 9% a year later. Now over here, revenue is still almost double that of the average stock. But what's happening here is that, let's go back, it was bringing more money to the bottom line than the revenue. So it was cutting costs, it was doing all kinds of good stuff in there, and it was bringing money from, revenue is the amount of money coming in, net income is how much profit it's making. So it was above the revenue that was coming in. Very, very nice. That means operating very efficiently, profit margins are high. But now, at 13% or 13.6% revenue for next year, the net income is falling down to 9%, and it's below the average stock. So what does this mean? Either their costs have gone up, their efficiency has gone down, and we really don't know the answer unless we look into the company, but is it permanent? And that's the big question of the day here. So let's look at the last year's clean surplus return on equity, and this is only up to 2025. And we can see, and this is what worried us last time we talked about this, is that the return on equity was starting to drop. So it went from real high return on equity in 2020. It was low when we had COVID back then, so people were afraid to go out and buy stuff. And then it went to 30.4%, 26, down to 21, down to 19, down to 18. So now let's bring it up to just the other day. Now we're looking at 2026 numbers, and we can see that 2025 actually went up a little bit, just tenths of a percent. But look at the average ROE. It's starting to fall. And when we look at the 3-year average ROE over the 5-year average ROE, we see a drop. Folks, the market does not like that. They want to see stocks that have a rising ROE, like Palantir right now. And CrowdStrike and those kind of companies, yeah, they're the ones that have rising clean surplus ROEs, and they are really rocking out there, aren't they? Yeah, they are, because we have them in the portfolio and we know how well they're doing. But look at Apple Computer, has just fallen and fallen and keeps falling. And folks, this was the pattern that we saw in General Electric. We also saw it in Microsoft some years back, about 5 years back, and we were out of that stock for 4 or 5 years because of this drop. And then all of a sudden it got its act together, and Microsoft is one of our best performing stocks out there right now. So can it come back? Can Apple come back like that? Or do we get out of it just in case this keeps dropping further? Real good question. So the title here is, can Apple continue to run with the big dogs? And that's what we said last year too. Can Apple continue to run with the big dogs? Because that ROE was starting to fall, and now we see it falling further, which really bothers us. Now, let's look at the last 12 months, but this is July. Look over here at this date, July of 2024, and we can see that Apple was keeping up with the S&P 500. And remember what our goal is, to pick stocks that outperform the S&P 500. And then Apple took a big dive and then went all the way up and is catching the S&P 500. Now, let's look at the next 12 months, and we can see, yeah, caught the S&P 500, was bouncing along nicely, took a ride up, came back down, and now it hit this declining double top in here, continues to fall. And of course, in the first couple of months of this year, we had a big, almost 20% decline in the market, and Apple came back, but now it has flattened out while the market in the black line continues to rise. So this is a big difference in here, and this has us worried. Now, look at the past 5 years, and this is May of 2024, or this is July of 2024. We can see, so this date up here is wrong. So we're looking at July of 2024. Over the past 5 years, we can see this stock was really rocking and just going up 350%. Let us look at the past 5 years as of the other day, and we can see the stock really rose up. But look at this latest decline. Yeah, it's still a better stock than the averages, and it seems to be kind of basing out here. But will it go back up to its former glory and really outperform the S&P 500? So this formation in here gives us a little bit of hope that maybe the stock has bottomed out and is now getting its act together. But boy, oh boy, as I'm recording this, which is on Thursday this past week, so just 2 days ago, the market was up and this stock is just not doing that well, is it? So we have to see. This stock is hurting a little bit, and I just got the newest Apple phone, and my last phone was the Apple 10, so now I have the Apple 16. And folks, I don't see much difference really at all. They say it's a better camera, but when I look at the photos that I take, I don't know. Is it worth the extra money that I paid for that phone to get an upgrade when I don't see it doing anything much better than the iPhone 10 did? So I'm a bit worried about that. And the question is, are they going to come out with any new inventions or innovations on their next phone that they're coming out with? What can they do? I know they're stressing Apple Pay and Apple Tunes right now, but boy, oh boy, their iPhone was their big item because everybody else is doing all the other stuff that Apple is doing, and all the big companies are coming out with their own chips to rival NVIDIA. So if they're coming out with their own chips, is anybody out there, and I'm starting to hear rumors that they're coming out with their own type of phones. Oh, and that would hurt. So anyway, we're worried about Apple here. Now, remember, our goal is to build your wealth faster and safer with better than average stocks, and Apple certainly is still a better than average stock. But when will that efficiency that it had in the past and that profit margin that it had in the past, will it continue to decline? big question here, folks. We're not sure if Apple's going to be in our 2026 portfolio. We'll just have to wait and see, because if there's another stock out there that is better than Apple, we will replace Apple. But that's a question. We have another 6 months of this year to go, and anything can happen. So, folks, forget about Apple. The rest of the market is doing fantastic as I'm recording this. And remember, if you want to live on the beach like Jimmy Buffett once did, and be on this sailing boat like he was at one time, or said to be at one time, then you've got to learn how to invest even better than Warren Buffett does now. So, folks, go out. Forget about the market on the weekend, and we'll be right back here in a couple of days.